So we're at section 4 of 5, meaning we only have one more section after this to complete our ProAdvisor training course for 2024. So let's get started. There's 4 topics that I'll be covering: bank rules, recurring transaction, the bank reconciliation process, and reports. So remember, we discussed the bank feed functionalities in QBO previously in another section. And now we'll be looking at bank rules. Remember, I said it's one of the most dynamic features that I think, that's coming into the last decade for QBO. The bank feed links the connected online bank accounts and credit card accounts to provide a direct feed that automatically imports transactions directly into the banking center, saving your clients lots of time. Once the transactions are imported into the banking center, your clients can review transactions in the For Review area, so they stay in control of what ultimately gets entered into their QBO. The review allows them to match and accept transactions with what has already been recorded in QBO, as well as categorize and accept transactions and enter a transaction that might have not been recorded in QBO. Clients can set up bank rules to save time, as many transactions are repeated on a monthly basis. Rules apply to unaccepted transactions only, meaning transactions that are found in your For Review tab of the bank feed. Unless your client has turned on the auto add feature, they'll need to review the transactions that QuickBooks Online applied a bank rule to. The client can then instruct QBO to carry out the specified action for that rule. For example, you can categorize and/or reclassify the transaction. To do this, you would open up the For Review tab in your bank feed and then select Rule Applied from the All Transactions dropdown. So let's look at what that looks like. So remember, on our left-hand navigation, we'd go to Transactions and we'd go to the Bank Transaction tab. And then you see here the first tab is For Review, the next one's Categorized, the next one's Excluded. And so we're in the For Review, and then over here is where the dropdown, and you would select the Rules Applied. And then you see over here you have matching and adding, or you can change the payee or whatever you need to do in your bank feed. Bank rules automate the categorization of transactions in the bank feed, including assigning the transaction type, category, payee, and if the client uses these categorization methods, class, tag, and location. Rules can be prioritized, copied, edited, deleted, and exported. Clients can even create bank rules to add transactions to the register automatically. They can also be used to automatically split transactions, which means assigning different categories to multiple lines of the transaction. So rules have 2 elements: conditions and actions. So conditions define which transactions to look for in a bank feed and can include criteria such as a specific bank account, keyword in the description, or transaction amount. You can have a maximum of 5 conditions for a rule. Then you have actions, and they tell QBO what to do with your transactions that meet the rule's condition. So examples of these instructions include automatically posting a transaction to the correct account and/or assigning pre-specified data such as the payee, category, class, location, and/or tag. Rules apply to unaccepted transactions only, meaning those transactions that you see in your For Review tab in the banking center. Clients will likely know which of their regular transactions they categorize the same way each time. It could be regular money in or money out payments, to and from the same vendor or customer, or purchases from a QBO. So if a client isn't sure, a good tip is to check the categorization history of a transaction. This shows how previous transactions from this vendor or customer were categorized. If the transaction have previously been categorized in a consistent way, the client may want to create a rule so that QBO will now do this automatically. To check a transaction's categorization history, you would go to the For Review tab in the Banking Center, and then you select that particular transaction, and then you would select Categorization History, and that would be found at the bottom of the panel. Clients can create a bank rule from that Categorization History panel, in the Banking Center. However, usually you go to the Banking Transaction tab, then select the Rules tab, and then select New Rule. Once clients have specified which transactions that meet the specified conditions, they can also specify whether the rules should be assigned or excluded. Transactions to and from these actions, they should be assigned or excluded transactions and then to and from these actions. To exclude, and as an example, a client might have mistakenly downloaded a double transaction. So sometimes your credit card might have two pending, but then by the next day you'd only see the one purchase. So when the feed comes in, there might mistakenly be, two transactions there, and then you would have to remove that. So you must choose a transaction type. The options here depend on whether the rule applies to money out or money in. If the rule applies to money out transactions, the options would be expense, transfer, check, or credit card payment. And if it's money in, the options are deposit, credit card payment, or transfer. Now, category. Here, the clients select the account from the chart of accounts to categorize this transaction to. If there's more than one account, you can add a split and then split by percentage or amount. The third thing you need is payee. That's optional but recommended. Again, the options here depend on whether the rule applies to money out or money in transactions. For money out transactions, the payee most likely is a vendor. It could also be a client though. For money in, the payee most likely is your customer. Tags are also an option here. Clients can also categorize matching transactions by any of the following advanced categorization methods, if they're using them: tags, classes, or locations. In addition, clients can also create a memo that'll be added to matching transactions. To do this, you would go to +, assign more. In the training section, it also covers the auto add feature and the rules list. Rules are applied in numerical order as listed on the rules list. The first rule that fits a bank activity, that is where the transaction meets those rule conditions, is the one that QuickBooks Online will apply. And then rules are listed in prioritized order. To change the order in which rules are applied, you use the grip icon and you drag it up and down. The transaction will be flagged for review if it meets the bank rule condition. You or the client can then decide whether to tell QuickBooks Online to execute that rule. If QuickBooks Online runs a transaction through each rule and still doesn't know how to categorize that transaction, it will try to give a category based on past transactions or by the customer vendor's name. These transactions will be labeled as uncategorized income or uncategorized expense or uncategorized assets as appropriate, and then you would go in and put the appropriate account there. Clients can use recurring transaction to enter routine expenses like, let's say, a monthly cell phone bill or a monthly utility bill that's normally at a fixed same amount. However, it's usually better to use your banking rule because this way you'll take into account any variation of dollar amounts or maybe dates. This is easier than fixed amounts and dates on a scheduled recurring transaction or checking for and editing reminder transactions. If your client used both recurring transaction and bank rules for the same transaction, you or they would have to check for and delete any duplicates that results from using both of those features. So here's some questions you might see under this topic. Where will the current transaction appear if auto add was not selected when creating a bank rule? It would appear under the For Review tab. What 3 criteria can be specified in a bank rule condition? Description, transaction amount, and bank account. For a money in transaction, the payee would be assumed a customer. So for money in, you're getting money in, you assume that's a customer giving you money. When an excluded transaction is reinstated, which tab in the Banking Center will it appear under? The For Review tab. From the For Review tab in the Banking Center, how can you exclude a bank transaction that is a duplicate? You're going to find that transaction. You're going to select the checkbox next to that transaction, and then you're going to select Exclude. That's in the banner on top. If a money out transaction is selected, the payee would assume to be a vendor. Which statements about bank rules are true? Have all of these in your notes because your question might have one or more. Bank rules can be prioritized. Bank rules apply to unaccepted transactions only. Bank rules could automatically split transactions. Bank rules can be copied, edited, or deleted. Bank rules could automatically add transactions to the register. Bank rules can have up to 5 conditions. Bank rules can only have one rule applied per transaction. What happens when QuickBooks Online doesn't find a rule that applies to a transaction? It tries to suggest a category based on past transactions with that same vendor name, or could be customer name as well. What transaction types can you assign in a rule for money in transactions? That would be deposit, credit card payment, or transfer. Have them all in your notes. Which transaction types can you assign for money out? Money out is expense, transfer, check, or credit card payment. What is the maximum number of conditions that could be set for a bank rule? 5. Next topic, recurring transactions. The recurring transaction feature in QBO is a great way for a client to automatically record payments and receipts that occur at regular intervals and in fixed amounts. Recurring transactions in QuickBooks Online can be set up to manage pretty much any transaction in any workflow situation. So like sales receipts, invoices, bills, journal entries, checks, deposits, or expenses. A recurring transaction can be set up in QBO to occur on a scheduled or unscheduled basis, or even as a reminder for you or your client. Once a client has set up the parameters for a recurring transaction, QBO will automate the process. Clients can also use an existing recurring transaction as a template for creating others of a similar nature. So here are a list of the type of transactions that you can set up as a recurring transaction. A bill, delayed charge, check, delayed credit, credit card credit, credit memo, deposit, estimate, expense, invoice, journal entry, refund, sales receipt, transfer, vendor credit, and purchase order. An accountant user may set up a recurring journal entry, let's say to reclassify deferred revenue or prepaid expenses. Transaction types that clients can't set up to be reoccurring. So these are the ones they cannot set up to be reoccurring. Bill payments, customer payments, time activities, pay down credit card transactions, and inventory adjustments. Some of the benefits of using recurring transactions are that clients can use them to automate money out transactions that are paid at regular intervals for a fixed amount, automatically invoice customers for regular service provided at fixed amounts, set up invoices to include unbilled charges and automatically send emails, record non-posting transactions such as a purchase order or estimates, and use recurring sales receipts with QuickBooks payment. Note, clients should review their recurring transactions to ensure they avoid sending out automated invoices for canceled or delayed work. Also note that a customer, vendor, employee, product, service, or account can't be deleted if they're used in a recurring transaction. There are 3 template types that you can use or your client can use to create a recurring transaction. That would be scheduled, unscheduled, or reminder. Setting up a recurring transaction. So you could either go to the gear icon, a recurring transaction, select new, and then select a transaction type from the drop-down, then click OK. Then in the template box name, you would give it a name. From the type, you would then select whether it's scheduled, reminder, or unscheduled, and then add a start date and an end date. And then you can use the category detailed section if wanted, and then click Save. Another way would be at the bottom of any desired transaction. So let's say I'm on my sales receipt. At the bottom of the screen, you'll see where you could select Make Recurring. So what are the 2 ways to set up a recurring? Here, some sample questions. What are the two ways of setting up a recurring transaction? By going to gear icon recurring transaction, and also by selecting the make recurring option at the bottom of the desired transaction. Which transaction type can be made into recurring templates? I gave you the whole list. You should have them in your notes, like bill, transfer, expense, invoice, etc. What type of scenario would a scheduled recurring transaction be the best automation option? Sales receipts, let's say, set up to a monthly customer for fixed amounts and descriptions. Remember, with sales receipts, you can actually set up QuickBooks payments. What are the benefits of using recurring transactions? I listed all 5 of them in earlier and I read them, so I'm not going to read them again, but you should have them in your notes. So the next topic we're going to look at is the bank reconciliation process. The Reconcile tool makes it easy to reconcile accounts and find discrepancies between QuickBooks Online registers and the bank. It's best practice to reconcile accounts monthly to ensure that what clients have in their QuickBooks Online books reflect the actual income, expenses, and other movements and adjustments of cash. When you're done reconciling, the difference between your bookkeeping and the bank statement should be 0. We reconcile a checking account in the course that I uploaded to my YouTube channel. So if you're not familiar with the bank reconciliation process, you should watch that and see what the process is like in reconciling a checking account. Before starting the reconciliation process, a client will need to know the beginning and ending balances and the total amounts of withdrawals and deposited on that account. It's best practice to connect your client's banking accounts so that they automatically upload to QuickBooks Online, so you don't actually have to have the paper statements in front of you. But some clients still like to do them manually, and either way works. I have a client that likes me to actually take their bank statements and fill out the reconciliation on the back. So it works either way, but QBO makes it much easier if you set it up, and the process is simple. Like I said, I have it in the 10 chapter book that I posted to the channel. So once you have the balance amounts, you can start reconciling. One way would to go to the gear icon and select reconcile. Another one is if you're a QBOA user, in your accountant tools, you can select reconcile. And another way is to go to your chart of accounts and go to the actual checking account or savings account and reconcile from there. So if you were to go to gear icon and reconcile, then from the account drop down, you would select which account you're reconciling. You would need to input the ending balance and ending date, and then you would select the button that says Start Reconciling. Once that screen comes up, you're going to see a whole list of transactions with like these circles at the end of them. You're going to place a check mark next to each transaction that matches with the bank statement. Once you've done all of that, you're hoping that on the top right, you see 0. If you see 0, then you click Finish Now. However, if there's some discrepancies, you're going to see History by Account. And when you click on History by Account, that will list all your reconciliation reports. I'm sorry. Let me back up. If you finish now, and then you click Done, then History by Account pops up, and you can see all the previous months' reconciliation reports. If you don't have 0 and there's a discrepancy, instead an alert will come up, and I'll show you that in the next one. Discrepancies can occur, meaning you don't have 0. There's a certain amount that you're off. Your books and your bank statements are not aligned, and there's a certain amount that you're off. If QuickBooks Online detects that the beginning balance could be inaccurate, it'll display an alert on the reconciliation screen. And then you'll need to fix the problem. So if the balance is incorrect, it could be one or more of the following. So one is there could have been changes made to one or more transactions that were marked reconciled. And here are 3 examples of that. Or one or more transactions have been manually marked as reconciled, and they're really not. Or QuickBooks Online included transactions in its own calculations that shouldn't be there. So this alert will come up, and then there's this link where it says, we can help you fix it. And then that link brings you to what's called the Reconciliation Discrepancy Report. And then that is where you could start. I mean, 9 times out of 10 for me, if it's something small and I see what the amount is, I'll go search and see if there's a transaction of that amount, and it could be that that one transaction wasn't included. Once you've fixed any issues that were flagged on the reconciliation discrepancy report, the reconciliation opening balance will match that of the previous closing balance. QuickBooks Online will then no longer display an alert when you start to reconcile, and then you could proceed with the reconciliation. Although the best way of fixing reconciliation errors is to use a reconciliation discrepancy report, account users can also choose to undo reconciliations and just start all over. To do that, you'd go to the history by account. You'd find that reconciliation that you want to delete. So you'd go down to the action column, and in the drop down, you'll see undo, and you'll select that and start all over again. So here's some questions that you might see under this topic. What's used to validate the bank and credit card account balances on a balance sheet? That's reconciliation reports. How do you undo a reconciliation in QuickBooks Online? In the Reconcile screen, you would select History by Account and then find that report. In the Action column, you would select View Report and then Undo. What is the default filter that is automatically applied when reconciling an account in the reconciliation dashboard? The default filter is Statement Ending Date. What statements are correct regarding reconciling a bank account in QuickBooks Online? I'm not going to read them because we had them, but you know what? I'll read them. To view the reconciliation report, you would select History by Account. Transactions added or matched in the banking center are automatically marked tentatively cleared. And to begin the reconciliation process, or to begin reconciling, you need to enter the statement ending date and ending balance from that relevant bank statement. Which three conditions could lead to the beginning balance of a bank or credit card reconciliation to be inaccurate? A reconciled transaction was deleted. A reconciled transaction amount was changed. A reconciled transaction status was changed to not reconciled. Which statement is true about the reconciliation discrepancy report? It's available if reconciling an account with reconciliation discrepancy. So it's only available if there was a discrepancy. The last topic that we're going to go over is reports. In the training section, Intuit provides it should be let me fix that now. An overview of the report center, where they highlight each section and explain each feature of those sections. Then they can go into the differences of cash and accrual basis accounting and its effect on the reports. Without financial reports, it's really difficult to understand how well a company is performing from a financial standpoint. Not only are such reports crucial for your clients to be able to understand their financial stability, they're also required by law for tax and standard accounting practices. So, for example, corporations are required by law to provide certain statements to the government as well as the public. The variety of report options in QBO provide your clients with objective and real-time data on how their business is performing, including key information about customers, vendors, and employees. A snapshot of the company's assets, liabilities, and equity at any single point, that's your balance sheet, or how much the company earned or lost over a specific period of time, that's your profit and loss. The valuable insight clients gain from reports allow them to keep accurate records to comply with mandatory accounting regulations, assess the financial health of a company to make business decisions, identify trends and roadblocks to make strategic decisions when necessary, and ensure that they pay the right amount of tax and mitigate any errors. Transaction reports. They make up the greatest portion of the reports in QBO. They provide transaction data in various formats to help clients find important information about their businesses. Examples would be like the profit and loss, the balance sheet, and the general ledger. List reports provide clients with information on the various lists available in QBO. That would be like account lists, which is your chart of accounts, product and service lists, customer contact lists, and vendor contact lists. Summary reports. They give clients an easy view of their customers, sales, expenses, and more. So examples would be like your AR aging summary or AP aging summary. And then you have detail. So you have the AR aging detail and AP aging detail, where they display more detailed information about each item. So how do we get to reports? On the left-hand navigation, there's reports. Then there would be a search screen. You could type in any of them, or some of them will be listed for you. Then you're going to have to fill out the report period. Make sure the time is correct on what you're looking for. You can also select the accounting method, accrual or cash. And then once everything's filled out, you select Run Report, and then you can either print or email or save as PDF. The profit and loss report summarizes the financial activity associated with each income and expense account for a specific period of time. This will indicate whether your client is operating at a profit, a loss, or they're breaking even. The balance sheet summarizes the financial position of the balance at any single moment of time. It reflects whether the assets the business owns are enough to offset its liability and leave a net equity. Most summary reports have corresponding detail reports. So, for example, your profit and loss will have a summary as well as a detail. Here's a chart I got from the training if you want to take a snapshot or write these notes down, as there might be questions on any of these particular reports that are listed here. Transaction detail account that lists all transactions for a period summarized by account. This report is the detailed version of the trial balance report. And here we talk about summary and detail, and then they list some more. QuickBooks Online also includes special report types, such as the business snapshot and the audit log. So the business snapshot is a graphical representation of the business money in and out transactions. So you can run this report from your report center. It's helpful for those of you who absorb information better from graphics, so you're visual learners. This is not the type of report that you would save any customization or want to do in printing form. It's just for you to basically be able to play with. The audit log, I love this. This lists everything that happens within the company and by who. So it'll have the username next to it and every time somebody signed in, signed out, and what they did. Quick reports. They display all activities for an account along with the running balance for the period. You and your clients can run quick reports from the relevant account in your chart of accounts. So if, let's say we select, PNC checking, and then you go to Run Report, it'll give you a quick report on that particular account. Clients can also run specific reports from certain centers in QBO. So for example, in the Cash Flow Center, there's an option to run quick reports. So that could be for open invoices, invoice lists, or sales by customer detail. And then here's another one. If we're in the taxes and you're in the sales tax, you can quickly run one of these reports. So you can have several questions that clients ask you, and then you'd have the corresponding report. So I'm just going to read the first one. So if your client asks, who owes me money? Then you can tell them, the reports you use or bring up would be the AR aging summary or detail. So I'll give you a second to take a snapshot or write these down in your notes. Then customizing reports, either by modern view or classic view. They go over this in the training section. But this particular one is the profit and loss. It's what you can change in your header and footer. So here for the header, you can either select show logo or not show logo, show company name or not. Here you can click right here and change the company name or change the report title. So profit and loss, or, if you want to do it by department. And then you can also show or not show the report period. Then for the footer, you can show or not show the date prepared, time prepared, or the report basis, cash versus accrual. And then you also can change the alignment for the header and the footer to left, center, or right. Oops. Management reports. To start creating a management report, you would select Management Report tab in the Report Center. Clients can create a management report from scratch by selecting Create Management Report. That's actually something new. Not too long ago, only accountant users would be able to create a management report from scratch. But now clients can do that as well. And then another way, or alternatively, they can choose to use a template. So to choose a template, you would select one of the 3 templates, and then you'd go down to the drop-down arrow and then select duplicate. And once completed, they can then export that management report via saving it as a PDF or a doc file. And then if it's a client, if you're using a client account, you would see the choices for management reports are company overview, sales performance, or expense performance. And then if you're accessing it via QBOA, it's either basic company financials or expanded company financials. Sorry, I had to sneeze. So here are some questions in this last section. What 2 formats can be used for exporting management report packages in QBO? That would be PDF and doc. Which report shows the book, or we're talking about purchase or cost, the value of your inventory items with quantity on hand? That would be inventory valuation summary or detail. What customizations can you do to a profit and loss report that's in Classic View from the header footer section of the customizing report drawer? That was that screen I just showed you, and I went all over them. So it could be any of these, like you could say show logo or show company name, show or hide report basis, align your header or footer. So hopefully you wrote that all down from that screen. Which 3 predefined management report templates will a client see? So this is the client going into their QBO account. They'll see company overview, sales performance, and expense performance. What 2 aging options are available for aging reports? That would be current and report date. Which report indicates when QuickBooks Online users have signed in and out? That'd be audit log. Which feature in QBO reports allows you to customize section titles on certain reports? That'd be the edit titles section, edit titles. Which report would you use to show the least popular product? That'd be sales by product service summary. Which report summarizes the amount of financial activity associated with each income or expense account for a specific period of time? Profit and loss. Which report displays the business's profit and loss in picture form, that visual? That's business snapshot. And if you want to display negative numbers in red on the profit and loss report, where can you select this from? That'd be going to custom and then general. In that section, you'd find that. And the last questions are, a client would like to create a custom management report. How would they be able to accomplish this? They can either copy an existing template under management reports or create a new template under management reports. And then which 2 management report templates will be seen by default when accessing a client's book via QuickBooks Online accountant? They'll see either basic company financials or expanded company financials. And that ends our section 4. We have one more section, section 5, to complete this ProAdvisor exam training for 2024. Thank you for watching. If I missed anything, you took this section and you saw I missed something, please put that question in the comments. All right, thank you.